Here now to talk about how investors can get tactical with leveraged ETFs is Sylvia Jablonski. She is the Managing Director of Capital Markets at Direxion. Thanks so much for joining me today, Sylvia.
Thank you for having me.
Well, when it comes to leveraged ETFs and market timing, what are you seeing on that front on both the bull and bear side? Because in addition to playing sectors, another way to use leveraged ETFs is to enhance your exposure in different market conditions.
Yeah, so a great example of that, a timely example of that is something like the coronavirus. So the levered numbers ETFs, you alluded to it, they're basically short-term tactical trade ideas. So you sort of have to know when to go in and when to go out, and that's based on two things: your view on the direction of the index and your view on volatility. So trend is your friend. Low vol trending markets are great for 3x ETFs. You put in $100, you get 300 of exposure. If an index moves 5% in a day, it's a 15% return, minus fees, expensive, all those disclaimers, but that's the general thesis. Compounding works in your favor over time if the markets trend upward, but if you have range-bound volatility, you can essentially lose pretty quickly. So what do traders do? They look at a lot of, whether it's earnings or whether it's a major news event like coronavirus, that might pull back the China funds because all of a sudden there's this short-term fear of, if this thing persists, there might be an impact to growth in China. And so some of the large indices might suffer and they might go into a bear fund like a Yang or a Chad to get that exposure.